We are again around that time of the week where we bring to you our webinars which are packed full of information and some fun Q&A. At 10 a.m. we have a webinar on rising inflation, how to make your money work harder for you. We have another webinar at 10 a.m. on the ithought PMS ecosystem, which will cover everything that you need to know about us. At 11 a.m., we have a webinar exclusively for all the amazing women out there, a candid conversation-based webinar which will help you chart out your wealth creation journey. If you would like to be a part of our webinars, don't forget to register. You can find the registration links in the description. See you all there.
Why improving portfolio quality is important now. At this point, what is the feeling in most of our minds? What is bothering us about this market? Most people have shortage of investment ideas. We don't have enough new ideas. We want new ideas which we can buy for our portfolios, and we want them at valuations which we like. While we may have a few new ideas, we definitely don't like their valuations. Typically, this kind of a phase keeps coming with regularity in our lives. But when this phase comes, how do we react? Many of us show a tendency to reduce the quality of stock ideas which we are looking at in order to find new ideas. So we are ready to see ideas which are mediocre or of lesser quality just so that we will be able to buy new ideas. So what essentially happens is, when we don't find great ideas at valuations which we really like, we tend to move down the quality curve or down the quality ladder. And importantly, given that too much money is chasing stocks, the valuations of ideas will be more expensive even despite our making a compromise with quality. Suppose you're ready to buy lesser quality stocks, even those stocks are likely to be expensive. So the merit of compromising on quality just to find new ideas is very weak. There is literally no merit in doing that. On the other hand, I see strong merit in going up the quality curve or up the quality ladder. There is going to be some pain in waiting, but you completely avoid investment mistakes. You got to have the patience to buy slowly, but you will be buying the right businesses. Today, if you go up the quality curve, you will get better companies which are far more resilient at valuations which don't excite you at the moment. But that's fine. If you keep waiting and these stocks dip even 10 or 15%, then they come into a valuation zone which gives you a lot of comfort. You rather wait and buy such stocks which will give you assured comfort and buy those stocks to make them significant positions rather than buy stocks which are of lesser quality and are not cheap either. This is something that I have done in the last 2 cycles with great focus and emphasis. As an investment manager, as a portfolio manager, as an investor, I wear the same hat on this subject. I am not interested in making that compromise and buying businesses which are of lesser quality simply because they are relatively cheaper than the high quality businesses. I'd rather buy high quality businesses by waiting and buying them at a point when they show weakness because of temporary factors. This is something that I think is very relevant to the current market context. The current market context should be encountered and faced with a very strong emphasis and alignment to quality. You need to be always strict and non-compromising on the quality of businesses you buy. You cannot have a trading mindset and hope that a mediocre company that you buy today will be seen by the market as a great company in the near future. A mediocre company will always be seen as a mediocre company. But a good company or a great company, even when it sees a temporary crisis or change in market perception, will always be able to regain its stature, and market will be able to change its perception back to looking at the company with respect and awe. As an investor, you should know that these companies are better suited than companies of lower quality for your portfolio. When I look at what I can do in this market, I first look at the better companies which I like, and then I decide at what valuation I'd like to own them, and then I follow them very closely until they come to the valuations which give me comfort. Along the way, I do make some small investments to build a starting position. And when the valuation is in my zone of comfort, I complete the position. Sometimes the valuation comes even lower into a zone of high comfort. At that time, I make the position a very significant position. So, to do that, which is to create a significant position, you need to start in good time in great businesses and be focused on what you want from those businesses and what valuations will make you invest in those businesses. That focus will give you the desired investment outcomes along with the right sized positions in your portfolio. This is a time to focus more intensely on quality and actually raising the quality of your portfolio. In fact, raising the quality of your portfolio will be a lovely hedge in times when the markets correct, especially when you see global volatility, or when you see a change in the market sentiment, or when you see drastic reversal of flows. This is a time to prepare for such a phase, and you need to have better quality stocks right now. So raising the quality of your portfolio is not an option. It is a compulsory need for every one of us. Thank you for watching this video.